Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, October 21st. Wow, are these great markets or what? I, for one, am loving them. Let's go right to the gold chart. I'm pulling this up so that you can see it in greater detail. I'm going to move it up just a little bit higher. Now, earlier this week, we saw gold hit a new record high on a closing basis, but then we started to fall back in this area here. In a moment, I'll show you why. However, right now, this formation to me looks like it's not quite done as far as the topping action goes. Gold has managed to find support at the 1338 to 1350 level, and it's likely to chop around here for the next few days. However, I don't believe that this double bar formation here represents a significant top. I'll need a few more days to analyze it. I did have a cycle high coming due on October 21st, which is tomorrow. That does not mean that gold is going to move sharply lower. It could simply mean that gold takes a pause before moving yet higher. I want to now go to excuse me, the US dollar, looking at the US dollar index. Last week I showed you how very significant it was that the US dollar plunged below this support line here on this chart, and more importantly, below this chart that I am clicking on right now, this line, which is a cyclical downtrend line. If the dollar were not in a long-term decline, it should never have fallen below this line right here on this chart. However, it did, and that for me confirms that the long-term trend remains fully in place. We are, like gold, seeing the dollar take a little bit of a pause and a bounce. However, right now I do not expect the dollar index to move much more above this 80 level, which is another cyclical downtrend line dating back many months ago. We'll need a few more days to analyze this action, but certainly with all the fundamentals in place for a lower dollar, and remember, even though Europe and Japan are also looking to devalue their currencies, the Federal Reserve has combined more power than both of those countries' central banks. I want to also now go right to the Dow Industrials. Let me move this chart down here for you, and let's take a look at the Dow. Here I want to show you something very interesting. Last week I did mention to you that the Dow came within just 3 points of significant resistance at 11,158. We tested that level again just yesterday, and then we sold off rather sharply, falling back below the 11,000 level at 10,978. However, please look at this blue shaded rectangle back in early August. You'll see that this formation right here looks very similar to the formation we just made in the Dow. My interpretation is that this is not yet the high for the Dow. It is true we could see the Dow pull back to 10.7, 10.6, this support line here. However, I would not be surprised to see a further spike higher in the Dow. I remain of the opinion that intermediate term, the Dow is topping, and we are likely to see a significant move to the downside, down to Dow 9,000, perhaps even 8,700. But that is not yet confirmed either, and I certainly cannot confirm this is a top, nor can I confirm a bottom. So right now, the Dow is likely to trade a little bit sideways. But if you think about it, that's not surprising in gold, the dollar, and the Dow to see them start taking a breather right here. We have the very, very important midterm elections coming up in just about 13 days. So a lot of investors are going to be squaring their books. A lot of hedge fund managers are going to be squaring their books. A lot of traders on the floors of the exchanges are going to be traipsing lightly in these markets for the next week or so in anticipation of the events that are occurring around the midterm elections and a very important Federal Reserve meeting that actually is occurring the same day as the elections. Till next week, this is Larry.